When you're trading on the intermediate term time frame, it takes a significant amount of patience to both wait for your trade to develop and grow, and also to be able to sit and wait for the right opportunity to go in and take that right trade and forgo many other trades that are not ideal, wait for the right one, and then see it finally take off. Took us about 2 months to finally catch Intuitive Surgical added to the model portfolio, and we've been riding it since August. Hi everybody, my name is Michael Amat. I'm the founder of ChartYourTrade.com, and our goal is to inspire millions of hardworking people just like you to take advantage of the stock market. And so in this video and in this video series, we're showing you the full path that we took in order to triple the return of the S&P 500 and how I was able to achieve a gain of a little over 60% in 2017. And it wasn't easy, and there were a lot of bumps along the way, but in order to help you do this yourself, I want to show you everything that happened, the good and the bad, and every stumbling block along the way. And in today's video, I get to show you one of the winners, Intuitive Surgical, that we bought in August, and how we've managed it, and some of the reasons why we are still holding it today in mid-February. All right, so strap in and let's get started. Now, when we look at Intuitive Surgical, a few key ideas jump out right off the screen at me. The first is, and these are all the same kind of things that we've been talking about for a while, the entry point and the exit point being super, super close. That's something that's super important. Time frames matter, and especially being able to hold for the longer term. So your time frame, your intention, having a plan ahead of time, and really adhering to that time frame so that we don't get shaken out too early. There isn't really a right or a wrong time frame, but how you manage that time frame is going to be right or wrong. If you go for a intermediate or a longer term time frame and that's what you buy, and you end up selling for short-term reasons, then you're going to end up losing. And that was something that I struggled with for a very long time, and following along with Adam Sarhan in this model portfolio has really taught me a lot about how to hold for the longer term and some of the stuff that we need to sit through. So looking at Intuitive Surgical, we got in here. If we're looking on the weekly chart, here's the daily chart up here, and we got in right on August 14th. Well, let's just blow up this weekly chart for a moment, and you could see that it rallied for a while, was getting support off the 10-week line, and then it started to consolidate sideways here, and this over here is arguably a flat base, and we got in just as it was breaking off of that flat base. Let's bring up the weekly chart, and it's a little clearer what was going on. And this consolidation here, it looks like we could have gotten in a little bit earlier, but look at how tight this consolidation is. From here to here, right? From there to there, it's really only about 4.8%. So I haven't done the exact number, but it's give or take 5%, right? So that's a really great entry and exit. And look at where it's consolidating. It's consolidating right along that 50-day moving average. We know that that is a spot where institutions typically step in to support a stock. In general, and also in the case of Intuitive Surgical here, we saw that it was getting support on and around that 50-day moving average and also the 10-week line. Those are very closely related. So another great spot to build support. And you can also see that it's testing that it broke out above this short-term resistance level, and then it tests it once, tests it twice, 3 times, multiple times over here, really building up that level of support right at around 307. So this is a really strong entry. Also, look at this line down here. This is the relative strength line, and you could tell by looking at this that when it starts curving up like this, that's its performance versus the S&P 500, and it is already outperforming the S&P 500 at this point. So while it's consolidating and getting ready to break out, outperformance, fantastic. Starts to run up, and then it consolidates over here. And so if you're somebody that got in for a short-term move, you're probably starting to sell right as it starts to break down, and certainly out as it's breaking down below the 21-day and below the 50-day over here. But that wasn't the plan for the model portfolio. And recall that the way that I tripled the S&P 500 was simply following the model portfolio trade for trade for trade, entering when it enters, exiting when it exits. And it's set up to be very simple that anybody can follow, and it's not complicated at all. It enters all at once and it exits all at once, and it does that for the sake of simplicity, because there's a lot of us out there that don't have the time to be managing trades intraday or intra-week. So we get the plan on the weekend, and most of the time after we enter, there's not a whole lot to do aside from adjust the stops upward. And that's what happened here, and we're holding for a while. So we get to the first time that we really raise the stop is somewhere in this neighborhood over here. After we break out above this, and then we consolidate, and then we break out again, now we have the 50-day moving average supporting, and so we're able to adjust our stop to down below over here. And that's a great stop placement because it puts us below the 50-day moving average, and then as we rally, it allows the 100-day moving average to catch up as well. So when we do get shaken, if we were to get shaken out below the 50-day, some people were, we weren't, we now have that 100-day moving average also supporting the low of the base. And it's a real subtle nuance that would be difficult to catch if you're not somebody that is trading all the time, or if you're new to markets. That's where having somebody with a lot of experience comes in. And I know that this sounds a little self-serving, so that's one of the reasons why I did a lot of the videos too where we did have losing trades. But having something like this where it's being managed for me was something that allowed me to stick with this and see this develop. Now, we have this over here. It's kind of a cup-shaped base. It's pretty shallow. This base over here is only about 12% or so deep, 11.5%, 12%. So not that deep of a base, but we are hanging out below that 50-day moving average from mid-December really to the first week of January. And so a lot of time below that 50-day moving average, not comfortable to sit with this. Like if you're looking at this and you're just hanging out below the 50-day moving average for a while, even if you are of a little bit of a longer time frame, it might be difficult to sit with something that's hanging out below the 50-day, especially if you're just reading a book and that book happens to say that, oh, a break below the 50-day moving average, and you see the heavy volume break below the 50-day moving average. Okay, that's a sell signal. Well, do you take the sell signal? Do you take that sell rule? Is it a rule for you? What are you going to do? How are you going to exit? It's the nuance of seeing the multiple levels of support, having your own plan and what you want to try to do with the trade, and really owning it. So it begins to rally off of those levels, breaks out again, consolidates, and this was hard to sit through as well when we had the S&P 500. I'll bring that up. So this correction started January 25th, and we're still in this. So here's what the S&P 500 looks like. So January 25th back here, and then you get all this mess, right? That was really difficult on the indexes. In fact, on the indexes, you have a 12% decline. I was saying that this back here, I just see this flagged over here, barely a blip on the radar. Somebody had told me back here that we were destined to crash. Well, they were right, but they were about a month early, so wouldn't want to exit here and miss all that, but exiting over here would be the right call. Anyway, back to Intuitive Surgical. You end up getting this correction of 15%, about 16%, greater than the S&P 500. You're going down to that 100-day moving average, and the stop is still way down here. And the reason why the stop is still way down here is because that's where support is. Again, if you've seen any of these other videos with sell rule, sell signals, this 3-strike rule, you'll know that we want to see a break of a trend line, we want to see a break of a moving average, and we also want to see a break of support in order to say, okay, now 3 strikes you're out, and now the trend is confirmed as heading downward. Yeah, you could maybe get out a little bit earlier, but you could also end up leaving a lot on the table too. So we're still in this one. We are at about, let's see, how much of a gain do we have as of right now? Roughly 30% gain. Pretty good so far. I'll let you know how we end up doing on this one. Just follow us, and yeah, let me know what you think about all this. Thank you all so much for watching. I really, really appreciate it. If you have any questions at all, please let me know and I'll personally help you. Also, if you like the video, always click that thumbs up button. That really helps us out a lot. And make sure that you subscribe to the channel so that we are going to get every single update. Thanks again for watching, and I see you again in the next video. Take care and have a great day.